trading sessions, days, and times. That's what we're supposed to look at now, right? Higher time frame analysis, lower time frame entries, intraday trading, psychology, and putting it all together, right? So we're supposed to be looking at sessions now, trading sessions, days, and times. All right, okay. So I think maybe let's just do that, and then we're going to any practice we have to do. That market does what? We always see that market open, right, on Sunday night. And then after that market open by Sunday night, we now get to see series of movements and trading opportunities through Sunday night to Friday night, okay, right? So we have from Sunday night to Friday night to begin to look for trades that we want to take, all right? So, but categorically, we have, guys, let's say Sunday night, then Monday morning, Tuesday, Wednesday, Thursday, Friday to take trades, right? And then weekend to analyze one or two things that we want to analyze. Okay, then now coming to utilizing these trading days and then these trading sessions. Now, but outside the 5 days of trading that we have in a week, all right, there are 3 main sessions in the trading week, right, that you must take note of and then not just joke with, all right? There are main trading sessions that you should not joke with. Number 1 of that trading session is the Asian session. Number 2 is the London session. And then number 3 is the what? Is the New York session. All right. So I'm just going to list out certain characteristics. All right. And one of the things I've come to realize that there's a way this thing helps. There's a way teaching helps also. Okay. If possible, whenever you learn something, even if you don't see anybody to share it with, maybe a friend of yours, you can just host a personal call, share with the person. But there's always that beauty of talking with somebody, all right, or talking to something. Sometimes I will just even on my own, I am my system, I will just be teaching myself something, just record, do a personal call for myself, record it, and hosting myself as though I'm hosting a class, all right. The more I begin to speak these things, the more I begin to teach them, the more I begin to see them more. Okay, it just has a way of helping me understand better. All right. So when we now start talking about these sessions, it's something that you might also want to go back and do what back test. All right. So these 3 main sessions are what the Asian sessions, the London sessions, and what the New York sessions. Okay. So certain characteristics of these sessions is that in the Asian session, right, the Asian sessions are considered as what the consolidating or consolidation sessions, right? And then can be the foundation of the trading for the day, right? So sometimes when markets open on a Sunday, right, the Asian session can be that very session where it can be that very session that leads us to what we should be looking out for, right, in price. And let me see if I can just pull out a different chart and then let's see if we can use it to write also something. There are 3 main sessions. Number 1 is what? Asian. Number 2 is what? The London. Number 3 is what? The what? New York. Alright. So these are the 3 main sessions. Forgive me. I hope this is going to be bold enough for you to see. Alright, let me just make it 16. Alright, so these are the 3 main sessions, the Asian, the London, and what? There are 3 main sessions you should take notes of, right? Asian sessions, and then so certain characteristics of this session. So number 1 characteristics. Okay, let me read it. Characteristics of this session, major characteristics of these sessions. Let me write down here. Asian. So I'm just trying to look at certain characteristics, all right, of these sessions. All right, so certain characteristics, okay. We have Asian session is considered, I say, a consolidation session which that is for the Asian session. Number 1, considered as a consolidation session which could form the foundation of what the day's trading. All right, we're going to just explain some of these concepts from, so just bear with me. Right? Let's just take it one after the other. Then for the London session, in the London session, what we see the markets do is the markets exact during this session most amounts most amount, right? Most amount of volume is exerted into the market. Then for the New York session, we have most amount of what we see most amount of volatility. What I just so most amount of what volatility. Okay. Then another thing again is this. So these are part of the things you should consider whenever taking trades on what considering session in trading. So this is one. And then when it now comes to pairs, best favorable pairs or best tradable pairs in the AUD pairs includes the NZD pairs and JPY pairs. All right, these are the best tradable pairs during the Asian session. For the London session, best rate is GBP, Euro, and CHF. So the best tradable pairs during the London session, right? For New York, best tradable pairs during the New York session include USD pairs, CAD, gold, US 30, NASDAQ, all right? So these are the best tradable pairs during what? During the what? Sorry, let me just arrange all about this. Okay. Best tradable pairs, just let's manage like this, okay? These are the best tradable pairs during what? These sessions. All right. So an understanding of this kind of thing now, it's going to help you know how best to do what? Approach the market in terms of what? Studies. If you're now an intraday trader, right? Normally, if you're not an intraday trader where you just trade pure structure, you don't care what the sections are saying, you don't care all those things. You don't necessarily need some of all this information to an extent, actually. You might just want to work based on structure. You don't care to know what liquidity or what the Asian session is saying. You don't care to know some of all those things, right? You might just want to play off from what structure is given to you. Okay, that is just one of the things that if you're not a trading trader now, you don't do all those things. You can just play off structures, look out for your SMC plays and the whole of all that. But if you're a trading trader, you want to come in terms with all this kind of concept, all right? You want to be able to know based on your own time zone, based on the kind of person you are, what sessions fit you the most, all right? Are you working? Are you a student? Or are you a full-time trader, all right? Which one is going to suit you the best? Is it the Asian session? Is it the London session? All right? And then is it the New York session? Then another characteristics again, let me just add it here, is the timing. All right, the timing where we have these sessions, okay? The timing, and we're going to be using Nigerian time now, okay? So for Nigerian time, as a result of the change in time, all right, London opens from 8 o'clock, all right, and the New York session opens from what? 2 p.m. All right. London sessions for now opens 8 p.m. 8 a.m. This is 8 a.m. New York session opens 8 a.m. All right. And then, so these are part of the things you want to know. All right. These are the basic things you want to know when trading sessions. All right. So you want to take note of these three key sessions, right, and know how you're going to apply them when trading. So you want to know that if you are a London kind of trader, what should you be expecting? Of course, the best tradable pairs during the Asian sessions are the AUD, NCD, and JPY pairs. What session? During that Asian time, the price action is going to be what somewhat choppy, forming equal highs, series of equal highs and equal lows, right? So forming those liquidity for price to come and take and then start going. But now, from my recent studies, I now came to realize that It's not actually every single day that they clear both the high and the low. All right. The market might clear only the high or might clear only the low. Some other days they clear both the highs and then clear the lows to begin to move. All right. Because sometimes I will always be waiting for price after clearing the high to come and clear the low before price now start going my way. And then I end up losing trades. All right. So I consider we have that overlapping sessions between 2 to 4 o'clock, all right, something like that. And then, like I was saying, you come to realize that for the AUD, NZ, JPY pairs, majority of those moves, right, you get them during the Asian sessions. Whereas those moves during London or New York session will now be what will be forming those consolidations and the whole of all that. All right. Whereas for the London and New York session pairs like the GBP, Euro, CHF, all these other pairs, you come to realize that during the Asian sessions, you get this consolidation for price to now begin to go in whatever direction it wants to go. And then sometimes initially when we were discussing some time back, we came to understand that when price forms series of equal lows and equal highs in the Asian session, what do we expect for price to clear both the lows, all right, give us evidence and then clear the lows and then continue going, right? Liquidity swept and then liquidity swept. But one of the things I now came to realize is sometimes I've waited for price, like maybe during the Asian session like this, I will wait for price to clear the highs and clear the lows, only for price to just come, clear the lows, reacts from even an order block within that Asian session and then still continue going down without clearing the highs above here. Okay. So I now started studying personally that why will price always do that? And then I now realized from my own studies, right, it's still open to back test, that majority of the times, those Asian, when you begin to get those clear plays of Asian highs and lows taken out in a particular day, are towards those structural highs or lows in a higher time frame bias. All right. So sometimes within the range, you just see them respect those Asian lows and highs, only for them to just take them out maybe in the future here, or take them out later on as external liquidity in the future here. Okay. So sometimes you just want to be able to identify at what point are you in the market. All right. Right. So these are things you should take note of. All right. On trading days. All right. During the London session, those of you that trade during the London sessions, all right, part of the things you come to realize is that what most amount of volume, and you see the difference in London session, we have most amount of volume and we have what most amount of what volatility. So we begin to see that as the banks begin to open, they begin to do what choke certain orders. All right. You see so many persons now begin to place orders here and there to now begin to stabilize the market. Some persons buy orders, some persons sell orders, all right. And then you now begin to see in the New York session, after those orders are placed and then the whole of all those things, you now begin to see volatility towards this party that wins. Is it the bulls that won? Is it the bears that won the fight or whatever, something like that? Still respecting structure. That's when you'll now be getting to see majority of those plays. That is why sometimes you might get that play, entry, or that needs play on EU or G or CHF during the London session. Then immediately New York session comes. During that, between 2 o'clock and 4 o'clock, which is that London and New York overlap, you'll now begin to see certain big moves on what EU and then G. Okay. So these are part of the things we now begin to see and consider. All right. So that is what these are part of the very few things you should take note of when taking trades during sessions or when considering sessions in taking trades. So we're going to take few examples on some of these pairs. All right. Now let us now talk of that is now trading sessions. Let's now talk on trading days. All right, the importance of trading days. One thing I've now come to realize is just as your candlestick form, you know how the candlestick forms on the weekly time frame now, right? Where you have this. Sorry, let me. So you have something like this forming on the weekly time frame. Okay, what should you be expecting? You should be expecting at least what some form of wick to the downside here, right? And what else again? Some form of wick also to the upside here. Okay. All right, so this is what we're discussing, all right? So still on the matter of sessions. Now, one of the things you want to look at is that every week, whenever the market opens, All right, part of the things you want to see in a bullish week, for example, is what you want to be able to identify what market what's open, market close, the high of the week. I mean the low of the week, and then what the high of the week. All right, that's one of the things you want to consider. All right, so whenever you're trading on Mondays, majority of the time, all right, whenever you get that high of the week in a scenario where you're expecting price to be bullish, what should you be looking at? You should be looking at after that open on Monday or that Sunday night, right? At least you should be expecting either a push of later on for price to come and give you that low of the week before now coming back to close, right? And then close above here to now create another week above. Okay. So sometimes the way we now approach the market on different days will now also help us become good and effective as traders. All right. So let me delete this one. All right. So there are certain things we now want to know. All right. So Sunday night, one day, Tuesday, these Thursdays and what? And Fridays. So let's look at on which day do we majorly get the highs because we want to be buying. So one of the things you now want to look at is what? Is that on each day, I be on every week, all right? If you are looking to buy in that week, where if there's a place you should be targeting, why it should be low. The low of what you want to be buying at the low of that candle that's formed in that week, all right? And then if it's for selling, you want to be selling at the high of that week that formed in that candle, all right? That's the week WICK now that's formed in that candle. So let's just look at one or two examples on how effective these trading days are when it comes to trading intraday trades and then day trading. All right, this is going to help what is going to help us in terms of knowing how best to approach the market whenever we want to study charts. All right, so let us look at EU now, for example. So let us look at EU now, for example. So on EU, what can you now see here? Today's date is what? Let me go to the 4 hours. All right, just make things, or let's do the 2 hours. All right, so what can you say now? Today's date is what? So from here now, we can now begin to realize that what the days where we get majority of those move. Okay, so now yesterday was what? Wednesday, so we have it to be what? Wednesdays, right? So this was the Wednesday, right? This is now what? Thursday. This was on what? This was on a Tuesday. Let's just use this to back test a little. All right. This was what on a Monday. Then we have this towards Fridays. Let's just take the pain of going through all this. Sorry, please. Then we have Thursdays because it's going to help us now when we want to begin to back test. All right. So you begin to move for like what happened yesterday, right? Wednesday. And then what else again? Tuesday. Okay, fam. All right. And then this was what on a Monday, right? And so on and so forth. But either ways, let's just continue going. Right. So we now come to realize that what normally happens when price comes in on Monday. From here now, what do we see price? They give what this open. All right. That was where the open came in Sunday into Monday, right? So immediately after this open, there was this rally up. Right? And then what were we looking out? We're looking out for what? More of buys, okay? So there was this rally up to the upside, right, on Monday. Right? And after that rally up on Monday, what do we see that price? The price came in, right? So after Monday, what can we see? Price came in on Tuesday, gave this rally up, and then did what again on Wednesday, all right? And then came in again on Thursday, and Friday was for what? The retracement. So from what we have here now, if we should draw the weekly candle, all right? So what are you going to be seeing? We're going to be seeing that this was that open price, all right? So that was that opening price of the candle. Closing price of the candle was what? This candle, right? On Friday. So that means this was the closing price, all right? That means the weeks that was present in that week, last week, was what? Then you will not see something like a week here, right? On the weekly time frame, okay? So you will not be having this box now to be what? That's the body of the candle that was formed, okay? So now that you've seen this, now it's not, this is not, it's not a new something. You now come to realize that majority of the times we get the bulk of the plays on Wednesdays and Thursdays, and Fridays usually used to be times for what? Retracement. Fridays used to be times of retracement. Look at what happened here. On Monday, price it what? It opened. On Tuesday, it came in down. And then on Wednesday, what do we now see? We see price rally up again on Tuesday into Wednesday, came down here again. Now I'm expecting a very strong bullish run, all right, on Thursday by tomorrow. Maybe I don't know how long the bullish run is going to last, but this is what I'm expecting. All right. The price is going to give that very long bullish run. And then on Friday, now happen to come and close somewhere. Okay, so when price now come and close next week, you now begin to do what? Continue the same thing again. Okay, so normal. This was Friday. Can you see retracement on Friday? This was Thursday. This was Wednesday. Can you see how that moved? This was Tuesday and Monday. So Monday price came in. Middle price came in on Monday. We had that rally up, and then on Wednesday we had that main push up. On Thursday, we now began to see how price now started coming down, and then finally retraced what on Fridays. So we come to realize that majority of the times, those main moves we seek to get in the market comes when we get them on what? On Wednesdays and on Thursdays, right? And then on Mondays. And then when it now comes to trading sessions are very effective, especially on days like Wednesdays and Thursdays, Tuesdays, Wednesdays, and Thursdays. All right. When you come into those London sessions and then those New York sessions, you begin to realize that price actually gives you those good moves, all right? So Sunday night is more like watching out for gaps, all right, or maintaining price behavior from the previous week, all right? And then Monday price action normally looks like something that is going to maybe want to retrace or rebalance the previous week movement, all right, or return to areas where they might want to now begin to create new series of highs or lows, all right. So Tuesday is now a favorable day for getting a good glimpse of what that week wants to be like. Okay, so Tuesday can help us now tell us, look, from the price action that is going to be forming on Tuesday, it can now give us a clear directional bias that okay, this week wants to go bullish or this week wants to go bearish. So that price action on Tuesday used to help us save a whole lot of stress of knowing what the price action wants to do. Okay, and then the same thing applicable then by Wednesday, we now begin to get what those major moves on Wednesday. Same thing again on Thursday, and then on Friday we now begin to expect potential retracement, maybe 20 to 30% retracement of the initial weekly move that we have. Okay, so these are part of the things we're going to backtest. Then we're going to go into the charts now, and then we're going to begin to see some of all these things. Okay, we're now going to go into the charts and then begin to see how some of all these things begins to play. All right, and then how we can now utilize them in our intraday trade when trading as forex traders. All right, and then session breaks. These session breaks, yeah, not I don't well, I've not backtested it for all pairs. Like I said, I just concentrate on only these pairs. These are the only pairs I trade. GU, EU, USD pairs, Major League Gold. After the shorts, these are the pairs I just trade. I don't even all those. I trade GBP USD, EU, Euro USD, Gold, US 30, and Nasdaq. Outside this, I don't trade any other thing. I don't trade any other thing. You barely see my charts on any other thing. So I don't know if they work like that for other charts. I've not backtested it. I did not backtest it. So you can now maybe backtest on your own. But personally, I just do it for only these pairs and I study how they work. And then that is how I get to use them. All right. So back to what we are now, the examples we are giving, right? I really don't know how to go about this backtesting now. Okay. So either ways, this is what we have for structure. Well, one of our calls, right? We're expecting price to come into this zone to give us that retracement, okay? And then on the weekly time frame, right, we're expecting also some form of what retracement on this side, right? Expecting buys. But one of the things we are saying is that, from what we have here now, price was supposed to give us this, right? We had this lows, break of structure, right? So higher highs. We cannot call this a higher low, reason being that what a new high was not formed. So there are possibilities as long as this trading range is concerned now, we are still within this structural high, right? And then these structural lows and then these structural highs, okay? And we can see how price came here, neatly distributed from here, and then started going down. So as long as the current price action until we see an evidence of accumulation, right, to take price higher, we are still very much what bearish, right, on the eve. All right, even having seen this, because we cannot have this to be maybe that lower lows, lower highs, lower lows, lower highs. Since this failed to create close above here, we could now be expecting what even more down push. All right, and then based on what the open interest, all right, and seasonalities is doing now, right, we should be expecting that what down push, because now we should be expecting the DXY to buy and therefore expecting Euro USD to now do what to sell. So I see price to do what I see price coming down, but not immediately, of course, all right? Not immediately. So we could be retracing into, we have this lower lows, lower highs. This is our most recent trading range now, okay? So we can be expecting price to retrace into what? Any POI up there to now begin that long sell, all right? Now including divergence and some of all these little things that we might be looking at. We might be seeing evidence where we can now be getting such trades from, all right? So as long as structural points is this our trading range, this high, all right, and this low. So we could be expecting price maybe into these points, having seen its internal liquidity, or into any of these points that are here. Okay, so we are still very much bullish until we get to that point where we're looking for price to go. All right, so I can still be expecting what some bullish price action, and then from here, what can we see price do? Price is creating what lows, highs, lower lows, higher highs. I mean higher highs, higher lows, right? So we're already here, and then now we can see how price is neatly reacting from this. Who knows? This might now be that push that might give us what the next high. So let us just watch what price wants to do there. So now going down, having seen our directional bias of the markets, the next thing we want to be able to do what is to mark out what our trading ranges. All right, you want to be able to identify, okay, what range are you now trading in? All right, what range are you now trading in? What range are you trading in? And also, you want to be mindful of candles that appears as wicks like this. All right, all these candles that appears like more like a doji candle, right? Where the wick is even longer than that of the body. Those inside of those candles, majority of the times are hidden other blocks that price could come in to retrace from. All right, so that is what we just got here. Going down to the lower time frame, you see that evidence hidden other block. I think on the 30 minutes or so, that price came to retrace from. All right, this was it. That price came to retrace from. All right, this was that last down candle. All right, and then we can see how it swept liquidity, and then price started going up. Right. So whenever we're taking intraday trades, this is how we approach intraday trades. Number one is that you want to, after getting your structural points from the monthly or weekly top analysis down to the 4 hours, 2 hours, 1 hour, you want to begin to look for your intraday trades from the 15 minutes and below. For intraday traders now, from the 15 minutes and what and below. That's what you want to look out for. Okay. So for example, now what we have here, we saw price did what? Give us what? This liquidity sweep, right? Swept this liquidity, came here, and then formed this what series of what institutional candle, and then broke structure to the upside. All right, and then we got this move. Some persons got these buys here. Yes, that's what it means. In trading trades, we buy and sell as long as the opportunity comes, all right? We buy and sell. Monday, I did not really get a trade. So just majorly yesterday and today that I was able to get a good trade play, all right? So it's something every day. Like every day, you just come to the market and look for something, and that is just it, okay? So having seen this kind of things every single day, what are you looking out to do? You're just looking out for opportunities like this in the market. So you already know what you want to look at what time. Remember, it is what time and price, not price and time. Right? As traders, intraday traders, you are interested in what time and price, not price and time. So when you're now looking for trades, you want to look at a particular time, maybe during the New York session. You want to see evidences like this. Once you see that evidence, it's now going to give you a clear opportunity to do what? Take that buys or take those sell. So having considered your structure now on the higher time frame, okay, going to the previous day now, look at when this happened. All right, look at the time that it happened. Let me bring this down. All right, look at that candle. All right, 14 o'clock. All right, that is this candle came in 14 o'clock, and that is 2 o'clock New York open. Let's go back now. They're going to say, let's look for 14 o'clock also. So where was that New York candle? All right, so this was that New York candle. This was where New York came into. So this was the candle that New York came into. Yeah, this candle, that was the candle that came in during the New York session. So if you had gone down to the 5 minutes or to the 1 minute, where is it now? 14. All right, beautiful. So if you had gone down here, fine, what should you be expecting? You should be expecting at that New York open now, which is at that candle, right? You should have been expecting price to do what? Come into where? This what? IPA field. So now begin to go. Did price come in there? No. When the price now come in there, we now got that price came in there. That was now where price mitigated off from the following day during the London session. So London now came and did what? Played that and give you that same play here again. So every single day you want to look for such opportunities. 14 o'clock, all right? This was 14 o'clock. And what was that? Your New York open. Was such price action presented? Yes. Little price came in. What can you see here now? Okay. Where was that 14 o'clock? This was where the New York came in. So immediately New York came in. What can you see? Price came in lower lows, lower highs, broke structure, but we were bearish as at this point. We're still very bearish. Immediately the broke structure, where could you would have been looking at what? At real time price, no doubt. You would have been looking at what? A little retracement into this point to go. But since price did not give you that retracement and did not close and came here to now distribute, this was now that good point, right? On the 1 minute time frame, this was now that good point, right? This accumulated distribution that formed there was now that good point to now take this sell. Okay, so back to EU, what we're discussing. All right, so on a trading day and trading time, after having your higher time frame bias, what else do you want to do? You now want to be able to identify what those sessions when they're going to come in play. Now, what session was this? This session that of play here was doing what? The London session. The London session came in and gave this beautiful play. And then the following day, during the New York session, we came to do what? To mitigate off from it. And then we started doing what? To continue going high. Okay? Same thing applicable. This was the New York session. Can you see that? Lower lows, lower highs, lower lows. Price broke structure. Came in during the Asian session to retest it. This was not what led to this sell that came to mitigate off from this, right? To now continue buying. So it's the same thing. So whenever you are trading intraday trades, taking intraday trades, all right, you just want to look for at this particular time. Once it's 8 o'clock, I'll just come to the market. Let me see what the price action wants to do with respect to what structure and then the respect to time. So having come to consider the time, now the next thing you want to consider what is price. Now begin to look out for those mitigation candles or institutional candles that are yet to be mitigated out of. Where are those institutional candles that price has not mitigated from? Where are those mitigation candles that price has not attended mitigated out from? When you are bullish, okay? For in this case now we are bullish, and then we're looking for price to do what? Come down to this point to mitigate. And then we saw how price came. How many days later on? 1, 2, 3 days later on the fourth day, came to mitigate out of what? Out of that candle. Same thing applicable to here. After price gave this beautiful price action, we now saw what price now did what? Came to do what? Mitigate off from here. So can you see now, tomorrow London session play for me now has formed. Because this is what I'm going to be looking at during the London session. Right, like this now, Asian session has opened. Asian liquidity to the downside might be formed. And then what can I see to play? Number one, this is that mitigation candle, right? That price is here to mitigate out from. Any other thing am I saying inside that mitigation candle? I'm saying it's imbalance. So I can be expecting price to do what? Come into that imbalance field. Going back to the 5 minutes to see if we're going to see anything beautiful. Right? So I can be looking at now what's played this institutional candle by tomorrow during London session. All right. So London session might come, give a little play from there, and then the New York session might now come. All right, and now give us that main push, that volatility move, right, to the upside to consider this buy. So from this now, I've already known that, okay, this is what I'm going to be looking out for. If price coming during the Asian session here, it's a dangerous trade to take, right, for intraday. I'm just going to keep off to now see the new price action. But normally, what am I looking out for price to do? I just want price to continue consolidating here, all right, to now come in here during the new, I don't want to see price into this zone, except during the London session or during the New York session. So if they want to play around, they can continue to play around. But me seeing price into this zone is only during the London or New York session. If it comes in there during this Asian session, it's a very dangerous trade to take. All right, you might get liquidated and all that. All right, and then it can be an indication that look at what price or price might change momentum or price might change this for today, or price might be going for a new low or looking for something else to play to now continue its move. Okay, so these are part of the things I look out for when taking intraday trades. All right, same thing applicable to G. What can you see here? That mitigation candle. This is that mitigation candle that led to the sell. All right. So as price comes to mitigate out of it yet, no, they are yet to come into that candle. So what can we be waiting for? We can be waiting for what price? This was that buy candle, right? That led towards the sell that grabbed this liquidity to now begin to buy. So I want to be seeing price inside of this region during what? During the London or New York session by tomorrow. Same thing applicable here. You can see how price, or most likely, what should we see price do? This candle has not been mitigated out of. So they might be that bearish run tomorrow. This candle also has not been mitigated out from with that turn of imbalance. This candle also what has not been mitigated out of. So we can see series of mitigations below there. And then you can see how price has been chopped. So what can we expect? Who knows? Price might just come and then give us this leg to come and mitigate either out of here or out of the second one or out of what the third one to now begin to give us buys. So this is what I'm going to be looking out for. So even if price did not give me this buys by tomorrow or by Friday, by next week, I will still keep my eyes open, all right, to this region to be able to take trades from this region. All right, so this is how I just analyze my charts every single day, combining sessions and days, knowing the one that is going to give me. Now, Wednesday did very fine. I'm expecting Thursday to even do better. All right, so now I begin to take my trades. Now you come to realize that the approach towards trading intraday trades is completely different from just trading the normal way. Because if you want to trade the normal way, this is what you are going to first of all identify. Structure is what bullish. Your trading range is now going to be what these lows and these highs. Where are the banks hiding? This is where the banks are hiding. All right. So having seen that this is where the banks are hiding, I should be expecting some bearish run at least into this imbalance field. All right. Imbalance is present. Mitigation candle is present. That is yet to be mitigated out from. And then the next thing that you want to look at is what your fibs from the lows to the highs. And what do we have? Imbalance fee just lines perfectly with what? The 886 fibs. So you can see that as now this is now trading without even considering the day the trade is happening or the time sessions or the time that the trade is happening. Look at we have 10 minutes more to the end of this, right? But that's we might not open any other thing again tomorrow then. All right. So if you're not considering maybe the trading days or trading time, just trading pure smart money concept, all right? You can now see that with this, you can just have fine that having seen this that you want to just set your limit here at the imbalance field, all right, at that it's 86 feet, and then target here somewhere above, all right. So even with this, normally what I do is once I come to the 1 hour, having marked this can now help me even reveal to me more that look, there are higher potentials that price might do still come lower before going higher. All right. And then evidence, mitigation candle here to be mitigated out of line perfectly lining with what the 886 fix. And then what did we say about mitigation candle? That in the mitigation candle, if opposite the mitigation candle, you are seeing an imbalance, expect price to feel that imbalance and retrace off from what that imbalance. So you can see how the 886 fibs just aligns perfectly with the close of the imbalance, aligns perfectly with what the mitigation candle, aligns perfectly also with what the structural points we are looking at and the whole of all those things. Okay, so I'm still expecting GU tomorrow to come down at least into this region to now begin that sell. and then that sell is going to be a what? A very long sell, no doubt. Okay, it's going to be a very long sell, no doubt. So let me just delete all this.
Sir, is it a sell or a buy?
I mean, sorry, a buy, not sell. Sorry, buy. Yeah, I meant to say buy. Sorry, not sell. Thank you. All right. So let me see. Can you see what's happening here? Asset correlation now. Having seen this, which price action is weaker? So you can see that GU is what? And GU and EU are positive correlating pairs. But what can we see here? GU, as G is forming lower lows, I mean higher highs, higher lows, higher highs. It's supposed to continue forming higher lows and then higher highs, right? But as this is happening, can you see the asset correlation here? So we can see even more evidence that price might continue consolidating, or who knows, might come a bit lower here. And can you see? So you can see that clear divergence now. So pure and more evidence that price is going to come. And then what's going to give us that buy? The weaker pair. I mean, we want to be doing what? Buying what's the stronger pair, not the weaker pair, right? And then selling the weaker pair. So which one are we going to be looking at to buy the most? All right. We want to be looking at what? Buying GU the most. So I'm very much interested in GU. And can you see how all those our other checklists align, right? So having this remaining. E is already there. So we might have some form of consolidation tomorrow in EU. While that consolidation is going on, we can now begin to see that as that consolidation is going on EU, what will now be happening on GU? GU will now be coming down to do what? Mitigate off from here. Okay, so this is now what I'm looking at personally to trade on EU and then on GU. All right, and then you remember we are looking at price to come where higher to some point to now begin to take price lower. All right, based on what seasonality did now and open interest, we now start we are going to be looking out for what shorts. We should be looking at what shorting opportunities. And what do you want to sell? You want to be selling what the weaker pairs. Now from here, can you also see evidence of divergence here? So I believe that open interest that has given us that evidence might now begin to play that sell is can come in from here. Can you see here? Price was doing what? Forming higher highs, and then here price was doing what? Forming what? Lower lows. So we can see what pair is now weaker. EU is what weaker. So we can now be looking at to sell EU from any point of interest we have at that region. Okay. So I'm going to be looking at perfectly selling EU. GU, I'm also going to be looking at selling GU, but I'll be focused more on the sales of EU, on how to be able to utilize the open interest and then the whole commitment of traders reports and all that. So immediately he just said, I just came to my chart and I have to just look out for, okay, where can we be getting that buys and where can we be expecting that share from that open interest? Immediately I came in here, I saw this divergence. I was very happy. Can you see more evidence here? Can you see what price was doing here? Was creating lows, and what's here was creating what highs. Same here, now came here and then started creating what highs, all right, and then came here and also started creating what lows. So can you see more evidence towards what with selling this market? Okay, so I believe by the time price come up here, we would have gotten all the evidence, and then it's going to be a long sell. But until we get to the point of getting that sell, we are very much interested on what GU buys, as we have studied on what the 1 hour, as we have studied what on the 1 hour. So we can see the asset correlation, right? So that is just how I approach the market as both an intraday trader and just a, how will I say it now? I don't know which other trader, a swing trader or something like that. Okay, that is it for that.